All right. Good morning, everybody. Good morning, all you magnificent melon heads. Happy Friday, everybody. Today is August 30th, 2024. And the top story this morning, we got some big earnings yesterday from computer maker Dell, and they were a big beat. Dell continues to blow up their revenue numbers. They are now the biggest player in AI servers. The stock was up several points this morning. Everybody was talking about, the AI bubble, it's still going. Well, there were no real surprises in Dell's earnings yesterday. Server revenue was up 80% year over year. That's massive, right? Dell is just bringing in a ton of cash off of these server revenues. A lot of that was included in that Hindenburg research report that just blew up SMCI stock earlier this week. One of the big segments within that Hindenburg report was how the 7 largest customers of Supermicro Computer had all cut big deals with Dell recently. So it's clear that Dell has come in and they're eating Supermicro's lunch. Now, the one missing thing there, it's kind of an important thing, all right? And it's something we've talked about on this channel a lot. The whole point is make money, all right? I just want to throw that out there again. I know we're really getting back to basics here. We're at a very, very low level here. We're talking make money is the point of business. All right. I'm glad we cleared that out, cleared the air there, because nobody in AI makes money except for NVIDIA and Taiwan Semiconductor. And that includes Dell. You see, Dell is bringing in a ton of money on these servers. They're making revenue numbers amazing. Like I said, up 80% year over year, but they forgot to turn a profit. Whoops. Turns out the margins in the server business, Dell stock has been clobbered by this year to date. It was down over 30% heading into earnings yesterday because the margins in the server business are near zero. So Dell has pretty much adopted Jeff Bezos's business model here. He's got an old saying, something along the lines of your margin is my opportunity. Dell is just undercutting Supermicro. They're lowballing on price. They're not making any money, but they're just trying to capture that market share. And well, this morning it's working for them. Their stock's up about 5% ahead of the opening bell. But remember, at the end of the day, the whole point is to make money. And Dell forgot to make money. Case in point, gross margins for the whole company went from 24.1 last year to 21.8 this year. Their gross margins have dropped by 230 basis points because of the added revenue in their server mix that has no profit margin attached. So that's the big problem going on at Dell. It's not that big of a problem, I guess, because the stock is up this morning. But again, it's really hurt them year to date. Also, we got a story making headlines this morning about a rumor at Intel. Intel is said to be in discussions with investment banks. And among the topics that are being discussed is spinning off their foundry business. Now, that's big news. Again, it's a rumor, anonymously sourced, people who didn't want to be identified because it's a confidential matter, all that stuff. The mainstream media never names their sources anymore. But Dell has really pinned their hopes on becoming a foundry company, on bringing fabrication and manufacturing of chips back to the United States, right? Their CEO has said, look, we're in for some austere quarters ahead. Cash flow's tight right now. NVIDIA's eating our lunch. But look, we're going to build these big factories, aided largely by grants from the CHIPS Act. But we're going to put Americans to work, and we're going to start building these things here. And we're going to come out the other side of this, a rival for Taiwan Semiconductor. And if this story in Bloomberg this morning is true about Dell considering spinning off their foundry business, that would be a complete 180 from Intel. Now, Intel is not even in the top 10 largest chip makers in the world anymore. They've really fallen from grace. But if this story is true, that suggests, hey, problems at Intel are probably a lot bigger than they're letting us know. It's also possible things like cash burn and liquidity might be starting to rear their ugly head. I mean, as of the end of June, I think it was, Intel had about $30 billion in cash on hand. I think it was like 29.6, and they're burning about $6 billion a quarter. So they are going to run out of money within a year if they're not careful here. So maybe this is the early indicators of a cash crunch over at Intel here. That's worth keeping an eye on. We got another blow up in the AI space yesterday, a smaller player this time, but Hindenburg Research is out with another one just 2 days after Hindenburg absolutely destroyed Supermicro Computer. They're out this morning yesterday with a report about iLearning Engines, ticker AILE, and that stock sold off more than 50% yesterday on this Hindenburg research report. Stop me if you've heard this one. Over 90% of their revenue is coming from this technology partner, this anonymous partner that iLearning Engines, they told the SEC, oh, don't worry, it's not a related party. They're totally legit. They're in India. Well, it turned out that company is named Experion, and their address is the address of the CEO's house, not the CEO of Experion, the CEO of iLearning Engines. It's his house. That's their corporate address. Whoops. And it's run by the same management team. In other words, it really looks like all of their revenue at this AI company is totally fake and just made up through a shell company that they established in another country. Wow. Sound familiar? Does this sound like anything you guys have heard before? You know, I'm starting to see a pattern here. We're seeing a lot more of these companies start to blow up in the AI space. I know NVIDIA just reported another great quarter. Yay. And the market just kind of yawned at it. Guys, this is feeling very toppy here. The frauds on almost a daily basis are starting to be exposed here. First Supermicro, now this iLearning Engines company. What the heck is going on in the AI space? And speaking of Supermicro, I got to send a shout out to this guy, Orca Fin, on Twitter, on X, on Substack. There is a link down below in the description. If you guys are watching on YouTube, I'll retweet his stuff if you're watching on X. This guy had the Supermicro story back in May. It turns out a big chunk of Hindenburg's research, and not to take away from Hindenburg, their work was excellent, and they really expanded on this. But the lion's share of the gotcha that was in the Supermicro report by Hindenburg was on those related parties, that CompuWare and Ablecom, those companies that are run out of the same freaking building by the CEO's brothers, and they all own it. And, you know, it's like Targaryen incest over at Supermicro. Well, this guy, Orca Fin, had that on May 25th. All right. Over 3 months ago, this guy had the whole story. I don't know how I missed it. The guy, he's got a pretty small following on X, but amazing work. And it appears that it was his Substack article that I linked down below. That is what launched the Hindenburg investigation. And of course, Hindenburg took Orca Fin's work and expanded on it and included a lot of other things. But I got to send a shout out to Orca Fin. Again, check out those links down below, because this guy had this stuff months ago. I should have caught it, but I didn't. Also, I'm going to spend some time reading this guy's work today. Again, I don't know the guy. I've never spoken to him or anything. But supposedly he's done some research about Broadcom and NVIDIA as well. I haven't had a chance to read that, but you can bet I'm going to be spending some time on that one this morning. So check out his work. We also got some retail earnings, and they were not good. We got Lululemon came out yesterday. They missed on sales. They lowered their guidance. Their comps grew less than expected. But Lululemon stock is doing okay because the stock has been pretty beaten up year to date. But it's another example, guys. This is an apparel company, I guess a high-end athleisure, if such a thing exists. I don't know what you would call Lululemon, but it's another story of the consumer is getting more choosy. He's just not throwing money at this stuff anymore. And, well, pricing pressures are starting to hurt these companies. And we got another one very similar to Lulu. We got Ulta came out yesterday. They missed their earnings. They cut their guidance. Their comps fell 1.2% year over year. What happened to the lipstick indicator, right? Lipstick is supposed to be one of those safe things because it's cheap and it's a guilty pleasure, and you can spend money on lipstick without breaking the bank and feel good about yourself. And there's all kinds of economic studies and theories about lipstick, about why it holds up so well during a recession. It's not right now, because Ulta just reported one of the worst quarters, or the worst quarter I've ever seen Ulta report. It's the first time they missed expectations in like 4 or 5 years. So even the lipstick thing is not really holding up here in this economy. It kind of makes you wonder how much lipstick you're going to put on that pig. Well, maybe they're already cutting back on that. We got a couple of stories out of China this morning. Also interesting, China is considering allowing refis on $5.4 trillion of mortgages. And this is news to me because I didn't even know people aren't allowed to refi their mortgages in China. My God, living under communism sucks. You can't even refinance your mortgage? What the hell, man? Like, oh, gee, thank you for allowing me to enter into a voluntary transaction with another party that has nothing to do with you, government. Thank you. It's so nice of you. Anyways, allowing massive refinances on $5.4 trillion worth of mortgages into sharply lower interest rates would stress the Chinese banking system, which is already very stressed. So it's important to keep an eye on that. This is a gamble by the Chinese Communist Party. They're trying to juice consumption by lowering mortgages to try to give people more disposable income and start to, just give an adrenaline shot to the economy because consumption in China is falling fast. But they're going to do that by further stressing the banking system, which is already stressed because of the developer collapses. But we'll see if that one came out. There's also a tooth grinding story about Country Garden. Oh my God, the corruption and just how blatant and open, out in the open, like in your face. These people are spitting in the face of their investors and their debtors. Wait till you hear about this Country Garden director and these dividends. On top of that, you got Vanke Group just reported their first half-year loss in more than 20 years. Again, the developer, the real estate collapse in China, just really, really bad going on over there. We got PCE inflation this morning. It came in largely unchanged year over year and month over month, ever so slightly below expectations. Market didn't really care, though, because it's not about inflation anymore, guys. It is now all about those employment numbers. And so the market kind of shrugged off the PCE numbers this morning, but we'll give you those anyway. And I just want to point out that we got the Labor Day holiday on Monday, so there will be no morning show on Monday morning. Sorry about that, guys. No coffee with the Melonheads Monday, but enjoy your day off if you're lucky enough to have the day off on Monday. And I just want to take a moment to shout out to all the people who are going to be working on Labor Day. It's usually those blue-collar guys that don't get the day off while all the white-collar guys are congratulating themselves on celebrating Labor Day. So shout out to all you guys who work with your hands out there who won't be having the day off. Good look. Just shout out for you guys. All right, why don't we shrink my big melon of a head and let's see what's going on in the market this morning. Don't forget that like button if you feel so inclined. And if you're new here, hit that subscribe button as well because we do this every morning except next Monday. S&P 500 is up 24 points or 0.43% higher this morning. Another green day for stocks. The Dow is up 71 points or 0.17% higher as well. And the NASDAQ is leading the way higher, sharply higher here, up 163 points ahead of the open or 0.85% higher. I am sure those Dell earnings are playing a role in the NASDAQ numbers here. The DXY, meanwhile, up again here. The dollar is rebounding sharply. Up another 24 basis points this morning to 101.58. We were threatening that 100 mark just a few days ago. It looks like a big jump happened around 840, 845. I'm not sure what that data point was. Possibly the PCE numbers causing a little bit of a rally in the Dixie here. But other than that, the dollar has been strengthening for the last couple of days. Looking over at the bond market here, still no uninversion. Give me that back. What happened to my bond market? Give me back my bond market. Oh, come on, investing.com. This is very frustrating. Sorry, guys. My link to the bond market went away because I fat fingered a click on something else, and now investing doesn't want to cooperate. There we go. Scrolling all through the stands and through all the other countries. Here we go. All right. The 30-year Treasury, 4.141. That's down 1 basis point this morning. The 10-year, 3.869. That is up 1 basis point. The 2-year, meanwhile, 3.92, up almost 3 points. And the 1 month is at 5.273. That's up a couple of, they're saying that's up. No, I'm sorry, that's down. That's actually down quite a bit. 5.27. We were 5.38 a few days ago. So finally getting some movement on the 1 month here. I guess that's going to start heading lower as we approach the September rate cut that most people are expecting. We should be getting down closer to 5 even there. Also, I want to point out the inversion of the yield curve. We got 3.868, almost 3.87 versus the 2-year at 3.92. So we got about 5 points and change worth of inversion. So the spread is growing again a little bit. We got down as low as a fraction of a point in the inversion of the yield curve. So still no uninversion. Hasn't quite happened yet. Looking over at the commodities board here, we've got gold is a little bit lower here, down $4 for spot gold at $2,516. Still above that important $2,500 threshold. Spot silver is at $29.29. That's down about 14 cents or about 0.5% this morning. Copper's up a couple of pennies. Platinum is down about 0.4%. Palladium is up a fraction of a percent. And WTI is down pretty sharply here, 2.5% lower for WTI crude oil October futures at $74 even. That's down about $1.91. Not sure what's taking oil lower here. Looks like a little bit of worries of global demand, maybe some some recessionary talk. I do want to point out to this one, guys, this story in Libya. I was kind of cracking jokes about this the other day, but this looks like this could spiral out of control pretty fast here. Libya's central bank governor flees divided country over fear for his life. You know, we made jokes about this a few days ago that when the central banker left the Libyan central bank because the Western government kicked out the Eastern government guys, that they took the passwords with them and they locked everybody out of the machines and nobody could get in. And so basically all the finances in the country were shut down, and oil production has been shut down in Libya over this. This is taking a darker turn here. Sadiq al-Kabir, the focus of the high-stakes power struggle that has shut down most of the country's oil production, the head of the Libyan central bank, who controls billions of dollars in oil revenue, said he and other senior bank staff had been forced to flee the country to protect our lives from potential attacks by armed militia. Militias are threatening and terrifying bank staff and are sometimes abducting their children and relatives to force them to go to work, Kabir told the Financial Times in a telephone interview. He also said attempts by I can't pronounce that name, Dabiba, attempts by this other guy to replace him were illegal and not in conformity with accords negotiated by the UN that required an agreement between the East and the Western governments on any new bank governor. Most of Libya's banking services have been suspended as the crisis has escalated and the central bank operations were disrupted. Also worth pointing out, about 750,000 barrels per day of Libyan oil production were offline as of Thursday, according to research company Energy Aspects, which added that a further 250,000 barrels per day were at risk. Libya pumped about 1.2 million barrels of oil in July. So this is not an insignificant event on the global oil market, guys. We're talking about potentially 1 million barrels of oil coming offline. At least 750,000 barrels have already come online. So this is going to put some upward pressure on oil prices. But again, oil's down pretty big this morning. So despite all this geopolitics that is pushing up oil prices, they're still heading lower here. That's how bad the demand picture is. That's how this global recession is slowly creeping into commodities markets. Still on commodities, by the way, let's just talk about Bitcoin real quick. $59,597 for Bitcoin on Coinbase. That's up a few $100 from yesterday, but still below the 50 and the 200-day moving average. The lower end of the band, Bitcoin has been trading in for pretty much the last 5 months or so. Now let's talk about the main story here. Dell stock gets a boost as earnings show huge growth in AI servers. I don't want to say the earnings did. It wasn't really their earnings that showed huge growth. It was their revenue. These AI servers are not really making any money here. MarketWatch is overlooking this. Demand for Dell's AI servers was up 23% sequentially in the last quarter. Dell Technologies beat expectations with its latest results on Thursday while continuing to show fast growth in its server business. The Infrastructure Solutions Group, which includes servers, saw revenue grow 38% to $11.64 billion in the second quarter. Within that segment, servers and networking revenue was up 80% to $7.67 billion. That's a company record. So huge growth in the server division here, guys. This is a really big number. They got a quote here. Our AI momentum accelerated in Q2, and we've seen an increase in the number of enterprise customers buying AI solutions each quarter. That's according to Vice Chairman Jeff Clark. So that's in line with that Hindenburg report about Supermicro that showed Dell was really capturing huge amounts of market share away from Supermicro. Worth pointing out, Dell's Client Solutions Group, which includes personal computers, hauled in revenue of $12.4 billion. That was down 4% from a year ago. So although the server division is exploding at Dell, beneath the surface, their core business, their PCs, their sales of computers, that was down 4% year over year. And most of their profits come from those PCs, comes from those other divisions. Most of their revenue is now coming from the server division, but most of their earnings is coming from that other business, and that other business is shrinking. So while all the excitement is, oh my God, all these servers, keep in mind, AI servers, that is a rapidly commoditizing industry where profit margins are shrinking very fast. And if you take that away, Dell is left with a core business that is not doing that well. Dell's outlook calls for $2 in adjusted earnings per share in the fiscal third quarter, plus or minus 10 cents. Analysts were looking for $2.19. The company also expects $24.5 billion in revenue, while analysts were calling for $24.6. So we got a kind of a light guide from Dell there also. And I just want to point out this quote from their earnings call. This is an important one, guys. Gross margin was $5.5 billion or 21.8% of revenue. This is down 230 basis points or 2.3% due to an increase in our AI optimized server mix and a more competitive pricing environment. So Dell is telling us here, yeah, these revenue numbers are great, but it's not making us money. Our margins are getting compressed. The more servers we sell, the lower our margins get. And that has been a problem for Dell, although this morning it's not so much of a problem. Dell stock is up $5.54% ahead of the bell at $117, pretty much up $6.26 here. Now, look at this year-to-date chart. Dell back in May was $180 stock. Now it's $116. Again, those falling margins have really hurt Dell here, although right now it seems those top-line revenue numbers and capturing of market share, that seems to be driving things for the moment. Now let's talk about Intel. Intel weighs options, including a foundry split to stem losses. This is a total 180 for Intel here. Again, this is just a rumor this morning, but a lot of people are reporting on this one. Maybe we got bigger problems beneath the surface at Intel here. Intel is working with investment bankers to help navigate the most difficult period in its 56-year history, according to people familiar with the matter. The company is discussing various scenarios, including a split of its product design and manufacturing businesses, as well as which factory projects might potentially be scrapped, said the people who asked not to be identified because the deliberations were private. Guys, Intel just got a whole bunch of money from the CHIPS Act and from the government to build these factories. They're already talking about scrapping these things. What the heck is going on in the chip space? There was supposed to be all this investment, and it looks like it's heading the wrong way. Morgan Stanley and Goldman Sachs, Intel's longtime bankers, have been providing advice on possibilities, which could also include potential mergers and acquisitions, the people said. The discussions have only grown more urgent since the Santa Clara, California-based company delivered a grim earnings report this month, which sent the shares plunging to their lowest level in 2013. The various options are expected to be presented during a board meeting in September, people said. A potential separation or sale of Intel's foundry division, which is aimed at manufacturing chips for outside customers, would be an about-face for CEO Pat Gelsinger. Gelsinger viewed the business as key to restoring Intel's long-standing among chip makers and had hoped it would eventually compete with the likes of Taiwan Semiconductor, which pioneered the foundry industry. But it's more likely that Intel takes a less dramatic step before it reaches that point, such as holding off on some of its expansion plans, the people said. The company has already done project financing deals with Brookfield and Apollo Global Management. So bad news at Intel here. It looks like liquidity, it looks like cash burn is becoming a problem here, although the market is liking this news right now. Intel stock is up 6.3%. Maybe Dell is helping things a little bit here. But I think this rumor, the market really likes the fact that Intel is looking at slowing that cash burn. $21.40 for Intel shares, up 6.6% or $1.33 higher this morning. Also, I want to send another shout out to Hindenburg Research. Another total banger yesterday. This time, iLearning Engines and Artificial Intelligence SPAC with artificial partners and artificial revenue. I'm not going to go into this whole short report, guys, but it boils down to this company called Experian, and it ends with an O-N, not an A-N, like Experian, the credit bureaus. By the way, one of the things these sham scam companies like to do is come out with a company name that sounds like a legitimate other company name. You guys remember JT Marlin from the Boiler Room? Oh, gee, this sounds a little bit like JP Morgan, maybe. They like to name their companies very similar to a legitimate company to try to lull unsuspecting investors into a false sense of security. Well, this company is doing this. Apparently, this Experian company is run by the same management team as iLearning Engines. Their address is the same, the CEO's home address. More than 90%, almost 96% of this company's revenue comes from this Experian company, which means they're just totally faking their earnings. And look what happened to this stock yesterday after Hindenburg's report. It dropped 53% in a day. Now, this isn't a huge company. It only got like a $210 million market cap, but it was 420 a day ago, apparently. So this one just absolutely crushed here, guys. Keep an eye on these AI companies, guys. when the tide starts to go out, you find out who's swimming naked, right? First SMCI, now iLearning Engines. But I just want to remind you guys, it is a paranoid, unfounded conspiracy theory to consider anything untoward might be happening at NVIDIA or any of their partners, even though these frauds keep being exposed all over the place. Not to mention Hyperscale Nexus. Oh, yeah, that was a money laundering front for a drug cartel or a pump and dump scam. Yeah, that's kind of a big one, too. A lot happening in the AI space. And speaking of that, I want to send a shout out to this guy at Orca Fin, or the Orca Fin on X. This is the guy who it appears was the inspiration for that Hindenburg report on supermicrocomputer, because this guy, and by the way, links to his X and to his Substack down below, he had released this on his Substack. Again, this link is down below. Look at the date on this, guys. May 25th, more than 3 months ago. SMCI, an intriguing story. Revelations from SMCI's financial reports. And this guy, Orca Fin, went into Supermicrocomputer and he found all of this related party stuff going on with Abelcom and CompuWare and the CEO's brothers and the just total clown show in the accounting books. This guy had this stuff on May 25th. And I would mention that Hindenburg Research mentioned in their report that report was the culmination of their 3-month investigation. Well, their 3-month investigation concluded on August 28th. This came out on May 25th, about 3 months before the Hindenburg report. So it looks like this guy, Orca Fin, laid the groundwork for Hindenburg, which, not to take away from Hindenburg, they did an amazing job expanding on Orca Fin's work, and they found a lot more other things through their own research. But I want to give this guy a shout because he deserves credit for this, man. This is one guy on a Substack who went in and dug up all this crap in their books before anybody else did. So check out Orca Fin and let him know nobody sent you if you see him. Good job, Orca Fin, man. Fantastic work on this one. Let's talk about some retail names now this morning because we got Lululemon cut their guidance, misses sales estimates after a botched product launch. This is an important one. Lulu missed Wall Street expectations for the first time in more than 2 years as it cut its full year guidance. Let's see, sales rose to $2.37 billion. That's up about 7% from $2.21 billion a year earlier. But beyond those total sales, Lulu missed expectations on comps, which grew at just 2%, well behind the estimates of 5.9%. Comparable sales in the Americas actually fell by 3%. There's that American consumer struggling to make ends meet. And, well, I guess that means she is not buying expensive yoga pants from Lululemon, especially not if you can't make the rent or utilities. So America comps down 3%. Although Lululemon stock doing all right here, it's up 3.7% here because year to date, this stock has been almost cut in half. So, the earnings were bad, but I guess not as bad as feared. Maybe the selling got a little bit overdone, so people are buying that one this morning. Another retail stock not doing so well here. We got Ulta misses Wall Street expectations for the first time in 4 years and trims their guidance after quarterly sales decline. Ulta Beauty fell short of the second quarter expectations. Their comparable sales fell for the second quarter 1.2% compared to an increase a year earlier. Look, comparable store sales at a cosmetics store falling, that is a very bad indicator, guys. It just goes to show you, ask anybody outside of Wall Street, ask anybody outside of the financial press. The United States has been in a deep, dark recession for years already. And you can see it here. Even cosmetic sales are declining. Cosmetic sales are supposed to hold up in a recession. All right. So if we're not even in a recession, as Claudia Sam and some of these muckety mucks and the bad vibes people are claiming, somebody explain why cosmetic sales are falling to me. Cosmetic sales are supposed to hold up in a mild recession. They're falling, which means we're not just in a mild recession. We're in a severe recession. Oh, but the GDP numbers are expanding. Why? Oh, that's right, because government spending is 8%. I'm sorry, government deficit spending is 8% of GDP. That's why. Because we're spending money like we're already elbow deep in a recession. And, well, if deficit spending is already 8% of GDP, what happens when we actually do go into a real recession and people start losing work and tax receipts go down? Those deficits are going to explode higher. Guys, we're looking at $40 trillion in the national debt within a couple of years here. It's going to get here really fast. Ulta Beauty stock down 5.25% here, trading at $348, about $349, down 18.5 bucks this morning. Looks like we're a little short of time, so we're not going to get to those China stories I mentioned about Country Garden. So we're going to move those to the afternoon live stream this afternoon. We'll talk about that. You're not going to want to miss that one, guys. They are just spitting in their investors' face over at Country Garden. I could not believe it. Shout out to my moderator, Mish, who caught that story. But you're going to have to come back at 3:15 p.m. Eastern time this afternoon for that one on my weekly wrap-up live stream. And I just want to say thank you so much to Justin Evans, who says, wait, wife and I became debt-free today. All right. Congratulations to Mr. Evans, the debt-free man. Congratulations, sir. Let's cut the applause. Congratulations on your financial freedom, debt-free. Wow. Wonder what that feels like. Let me know in the comments what that feels like, Justin. And congratulations, sir. You're doing it right, by the way. Also, Angry Dragon says, wasn't 1920 and 1929 caused by hyper-financializations? I don't know about hyper-financializations. There were so many causes that went into the 1920 and 1920, the mini depression, and then the 29 Great Depression. There was a lot of things that contributed to that. Commodities and overproduction and farming and the Dust Bowl contributed to that. I don't know that hyper-financialization was really a thing back then. Before my time, obviously, I was not around in 1929. I'd have to go back and read about that. But I can tell you hyper-financialization is absolutely 100% behind the unaffordability crisis in housing. And everybody's got all these ideas. All these politicians are out talking about, oh, we're going to subsidize this or a tax credit for that, or we're going to do this to make homes more affordable. There is a one-trick pony that could make homes instantly affordable. Order the Federal Reserve to sell their holdings of mortgage-backed securities. It might require an act of Congress to do that because the president can't necessarily order the Federal Reserve to do something, but Congress can order the Federal Reserve to sell their holdings of mortgage-backed securities. Instantly, homes become more affordable. Gen Z and millennials are given a place at the table, able to once again maybe even entertain the idea of maybe one day buying a home. It would be almost instantaneous. Of course, it would crash home prices. It would probably take the economy with it, but it would solve home affordability. And if we're really serious about making home affordability a priority, then we're going to have to let that equity go up in smoke. We're going to have to let those home values fall, which means a lot of boomers and Gen Xers would lose the equity in their homes to the benefit of the younger generation. It needs to happen. We need to let it happen, but they're not going to let it happen. They just won't. The Fed won't. The Treasury won't. They're going to spin up the money printers. They're going to try. Some people think they won't be able to stop it, but I think they're going to try. Thank you very much, Angry Dragon, for being a Melonhead member. And thank you, Justin Evans, says celebration of no debt once again. That is the same Justin Evans, whose wife and he are debt-free. Once again, congratulations on the financial freedom, sir. I bet that is a good feeling. It's been a long time since I've been debt-free. I'm not exactly up to my eyeballs in debt. I have plenty. I'm actually very careful about my debts, and almost all of my debt is very low interest. But I bet that's a really good feeling. Congratulations, Justin. And thank you for supporting the channel, sir. Steve Voitis says, according to Fred, the 10-2 did re-invert yesterday. The Fred charts are momentary snapshots in time. I wouldn't look too close into the Fred snapshots, Steve. Check when the data was last updated. And we have had a couple of these momentary uninversions. We had one a few days ago. We had one, I think, 2 weeks ago also. We've gotten very close, but it's been a blip on the radar, and we have re-inverted and the growth. So, we're still looking at, I think, 4 or 5 basis points of inversion at the moment. It has not meaningfully uninverted yet. Maybe it did momentarily do that, but thank you very much, Steve. I appreciate the support of the channel. And Matthew Berry Teaches says, rest in peace, Columbus Blue Jackets. Columbus Blue Jackets, that sounds like a minor league baseball team. Is that what that is? Oh, no. Columbus Blue Jackets forward Johnny Gaudreau and his brother Matthew, who were killed by, oh, wow. Yikes, killed by a drunk driver while riding their bikes in New Jersey. What the heck, man? Oh, my God, that's dark. Sorry, Matthew. Sorry to hear that. I don't know if these guys were close to you or not, but, man, that took a dark turn. Guys, don't drink and drive. All right, you don't need me to tell you that. You're not supposed to. But kids struck down before their time. What were the names? John Gaudreau and his brother Matthew. So sorry, Johnny and Matthew, and my thoughts and prayers to the family. Nobody should ever have to go through that. Thank you, Matthew Barry, for supporting the channel, sir. Uncle Fedster says, enjoy your holiday weekend, Jack. I shall try, Uncle Fedster, to enjoy my long holiday weekend. I got a lot of yard work to do. Oh, man, I tell you, the yard work never ends. These Pennsylvania weeds are relentless, and they fight back. They've all got a defense mechanism, either roots that won't quit or thorns or poison. I tell you, man, them Pennsylvania weeds, they are not playing. But we must press on. We will persevere in the great war against the PA weed machine. Thank you very much, Uncle Fedster, for the support of the channel. And thank you to Cole Marsh, says the chat is fire. Love you, peeps. Well, thank you so much for the fire in the chat and for everybody. Shout out once again to my blue wrenches and my mods for everything you guys do. And yeah, I can see my dad is talking about wrestling. By the way, you guys may know my dad is something of an expert on wrestling. So, yeah, I'm sure Dad probably knows these guys and he's heard of them before. Thank you very much, Cole. I appreciate the super chat and the good vibes this morning. And thank you, everybody, for having your coffee with the Melonheads. I'll be back at 3:15 p.m. Eastern time this afternoon for my weekly wrap-up live stream, my favorite time of the week. So I'll see you guys then. Just a reminder, no show on Monday due to the Labor Day holiday. Enjoy your time off and your time with family if you're lucky enough to have the day off. Shout out to all the guys who don't. Hi, Mom. Hi, Dad. I love you guys. Thanks again to all my Patreon supporters and Melonhead members down below. Appreciate that, guys. Links if you want to check that out. And until next time, live small and dream big.